We're gaining traction, and we are delivering more on products that are transforming, literally, as we call it, consumers into customers, and starting to deliver results as a team. Overall, we're about ahead of where we expect to be on things like capacity reductions, and also on consolidating our employee base, both on a salary standpoint. We said we take out the equivalent of about 14,000 salary equivalent employees. We're just about done with that. We actually are done with that. We do have some folks that are staying with us a little bit longer through the remainder of the year in some critical positions. And on the hourly side, so far we've exited over 27,000 of our hourly workers, and have done that in a manner in which we've kept the plants running very smoothly and also with quality. So our manufacturing team and HR team is doing a fantastic job in this area. Our customer satisfaction numbers are also heading up in the right direction and tracking according to the plan. And all of this is good news and starting to build momentum in the organization. But I'm really proud of progress in three particular areas. And the first one is we are absolutely on track to deliver a product lineup that is 70% new or significantly freshened by the year 2008, or by the end of next year, and 100% by the year 2010, or by the end of the decade. Secondly, our quality efforts by the team are really paying off, and we're actually ahead of our projected timetable. And you've probably seen that, obviously, in some of the third-party accolades we've received over the past couple of weeks, and it's very, very encouraging for us, but also very, very satisfying that we're seeing our customers be very happy with their products. And thirdly, our 2008 model year lineup is our strongest ever. You know, we have a tendency in this business always to talk about, look at the products that are coming in 2 to 3 years. Now, speaking of the market, let's turn a little bit to that. Small cars, both the B and the C car set categories, are stronger than a year ago, and as you can see on the slide here, is up 6%. That's on top of 05 to 06, where this market was up. Now, crossovers, we hear and we talk a lot about crossovers, and the reason we do is because it is the hottest segment in the industry, and so far year to date, it's up 17%. Now, clearly, the small car and the CUV segment, or crossover segment, are growth areas in the business, and it actually is in line with the expectations that we laid out, if you recall, in the auto show preview that we conducted with you back in December of last year. And if you think about it, cars and car-based crossovers now represent 62% of the marketplace. In 2004, 30% of our retail sales were cars and car-based utilities, 30%. Fast forward to 2007, and year-to-date, 48% of our retail sales were cars and crossovers. So a big shift in a couple of years. And in the month of May, just last month, it was 52% were cars and crossovers. And June, more or less, is shaping up just about the same way. So you can basically see where the trend is heading. Now, in addition to anticipating this shift and basically retooling the business, we're delivering for customers products that they really want. For example, our newest products, like the Lincoln MKX, the MKZ, the sedan, and the Mercury Mariner, are meeting or beating our expectations for both sales and for conquest rates. The MKX has a 44% conquest rate, and strangely enough, the MKZ also has a 44% conquest rate. And Mariner has one of the highest conquest rates in the company at 47%, so pretty high for us. And in an industry where conquest sales are tough to come by, these vehicles are doing very strong in that regard from our perspective. And of course, our Wixom assembly plan received the J.D. Power's Platinum Award, which recognizes it as the industry's highest performing plant, actually worldwide. So for us, this is more validation that the changes that we're making in our manufacturing processes, in our quality processes, and our product development processes are starting to bear fruit. And our momentum on improving quality is flowing through the bottom line as well. We're seeing our warranty costs down, and as reported in our first quarter earnings, our warranty costs in North America was $400 million less than it was a year ago, and we continue to see a positive trend in that regard. So bottom line is more customers are seeing and feeling the quality that we're putting into each vehicle. And as we tell the team, the quality race, there's never any finish line for it. Make no mistake about it, our objective is to be best in class and back that up, not with just sound bites, but with actions and determination and consistency and consistency from the senior management team all the way down for the folks who work on our shop floor.